Let's take a look at the income statement. This is another one of accounting's very important financial documents. It gives the answer to a very important question. In fact, a question that many feel is the most important question in all of business, which is, are you making money? How do we solve this? Well, very simple. We take revenue, which is money that comes in, we subtract expenses, money that goes out, and then we see what happens. If it's a positive number, yay, profit. If it's a negative number, got problems to fix. Let's take a look at what document we can use for this and how that relates to our individual lives. So here I've laid out in Microsoft Excel an income statement. And this income statement is one that will help answer the revenue and expenses question from a personal perspective. In order to get started, I'm going to do something real quick, which is just change the format of these cells so that it is an accounting number. And now it'll come out like money. Great. So we start first with the revenue side, this section up here. Now notice here the first thing that I've did, which is I've separated fixed income from variable income. Fixed means that over the course of a year, the number will stay the same. When you are a salaried employee, your check will be the same every 2 weeks or month or weekly, depending on when you get paid, as long as you don't get paid overtime. So you have a salary, a fixed amount that's coming in regularly. This is our fixed salary for the month. Over here, variable is any number that can change between a given period. Here we've broken down our income statement into months, the first 6 months of this coming year of 2014 to be exact. Overtime by its very nature is something that is pretty variable. It changes from time to time. So we don't want to put it next to salary because that is a number that's consistent. We're counting on it every month. In fact, we're so confident about our salary that we're going to go ahead and put it in for all of the months that we've laid out. Savings interest will change depending on how much money we have in the account, and overtime will change depending on how many overtime hours we work. Now we want to know how much all of this adds up. So let's say we use a quick sum formula here, add it all up. Now we have our positive number. Wonderful. That is the revenue side. Down here we have expenses, and as you can see, we've broken down expenses into 4 categories. The first are the fixed expenses. Just like fixed revenue, a fixed expense is one that over the course of a year will stay the same. You will generally pay the same amount of rent every month if you have a lease agreement or if you have a mortgage. So let's go ahead and just random number, let's put in $500 for rent. Same thing is generally true for utilities. I know that for many people utilities might change, but for others they might not. They're pretty fixed. So we're going to put them in fixed for now with the understanding that you can move these around on your list depending on how this works for you. So let's say $50 a month for utilities, another $50 for phone and internet. Again, that assumes you don't have overage, but we're doing some assumptions here. No, $50 for TV and insurance. I'm going to put it into one category, but this could be both car and health, so let's say $200. The next category that I have is variable expenses, but I broke these down into necessary expenses. You might not spend exactly the same amount in the grocery store every week. However, you do go to the grocery store on a regular basis. So it's not a fixed expense in that it does change, but it probably doesn't change very much, and the fact that it is an expense every month doesn't change. So we're going to go ahead and put, let's say you spend about $75 a week, so that adds up to $350 a month. I'm sorry, to $300 a month. Let's say you fill up gas every 10 days, it's $50, so $150. And for those that have children, you may have babysitting expenses. I don't, however, so I'm going to put 0. It's completely acceptable to put 0 on your income statement if it is necessary. Income statements, much like the balance sheets, are looking for the truth. They're not trying to draw an opinion one way or another. It's just facts. The third category that I've set out for expenses are variable, but they are disposable. Disposable income is the term that economists use to describe money that you can spend pretty much however you want. It's the money that's left over after you have brought in all of your salary and your income and you have paid all of the things that you have to pay, which would be these 2 categories right here. So let's say that you go out once every couple of weeks. Each time you go out it costs you $50, so that's $100 a month. and you went on vacation this month and that cost you $200. You might not go on vacation every month. If you do, congratulations. But this month you did, so we're going to put it there. The fourth category, a very important one, is savings and investment. Remember that you should have between 3 and 6 months of your salary saved in case you lose your job, you have an emergency, your car breaks down, your house lights on fire, any number of different things that come up. You have to be prepared. So it's important to put away a specific amount of money each month. We're going to be conservative here. We're going to say 10% of our overall salary, and that's $400. Then let's say that we chip in a little bit for retirement. Our work chips in, we chip in. Let's say that's $50 a month. And then let's say we also put $100 away each month to buy new stocks. We're going to use the same sum formula that we did up in revenue for expenses. Not too bad. As it turns out, because what we're going to do is here we type an equal. Then the formula is revenue minus expenses equals net income. That net income number is the total amount that we are seeing positive or negative. The number here is positive. That means we did well this month. We have leftover cash. That means that you probably should add a little bit more to the savings category, but that's for a different lesson. If, of course, the number were negative, let's change this just to show you what that would be like. It would come up like this. Very, very bad. You never want to see a parentheses in an accounting document because that means negative. So revert it back to the made-up numbers that we created. Wonderful. Great thing about the income statement is you can use it on a monthly basis. You don't have to create a new one every month. You can have one for every month of the year, maybe make one every year, every quarter, every 6 months. Whatever you want, doesn't matter. Use this statement to keep track of where the money is going in your household, in your life overall, and to make sure that you are always positive. When you are positive, you can stash money away in case something bad happens, or looking a little bit more positive in case a business opportunity comes up, an investment opportunity that you heard about, or hey, maybe you just want to take your special someone on a vacation. That is an income statement. Hope you enjoyed the video. If you have any questions, please do not hesitate to email me.